All right, okay. I was talking about it a bit in the beginning of the last video. I got sidetracked and then I did the whole entire strategy, but I'm trying to go over days where you should be looking for no trades. Why, you know, no trading days are still a winning day in your book because you are not sacrificing any capital and you are, keeping your money to yourself, living to trade another single day. That's literally all that we're trying to do in this entire thing. This is our entire thing. We need to be able to recognize days where we need to stay out of the market and recognize, not everything was fulfilled in my entire strategy, so why would I risk money on the table? It just doesn't make any sense. So I want to go over a trade where I actually lost on, and I analyzed and journaled why I lost this trade, and I you uh, know now that it was a bad trade to take, and I can realize this for future times and pattern recognize when these things happen. So if we're looking at the 4 hour top down from this day, we can see that in the NASDAQ, we are currently bearish, going to the downside. And then on ES, we are currently still maintaining bullish, but we did inverse this final gap to the downside. So we might be heading downwards, but we are still in a bullish trend. So both of the indexes telling us about opposite things, not necessarily good. That's not what we want. We want them to be kind of aligned and correlated, and then maybe one of them can be more bullish or bearish than the other one, but uh, you know, we kind of want them to be completely aligned. The 1 hours, both of them looking pretty bearish. We're respecting bearish gaps to the downside. So going into the day, the bias is a little bit muddied. We don't have a full 1 hour or 4 hour time frame sweep really, other than these Asian session lows. So we can see that previous London session has come down and swept out these Asian session lows. So really, what are we all looking for? We're kind of looking for, you know, uh, breaks back up to the upside, reasons to go long for this opportunity, but we're probably not looking for that within the first 20 minutes of market open. When we play out a couple of candles here, we can see that a fair value gap gets formed right here on this index. And if I'm just sitting down here on the 1 minute time frame, I think this is where I messed up really, because if we're looking on the 5 minute time frame, we don't see any bullish retrace candles. We don't see any equilibriums getting filled on the 5 minute time frame. However, when I scaled down to the 1 minute time frame and I saw this break of structure here, I considered that a equilibrium fill or a break of structure to the upside to signal that we were going to hit equilibrium on the 5 minute and then be able to go back down to the downside. So what did I wait for after that moment? I waited for us to break structure to the downside right here on both of the indexes. So I entered a short position on this trade right here. Why was that a terrible idea, really? Well, I didn't wait for a 5 minute retrace confluence, really, and we could have definitely came back up here and manipulated within this 20-minute time frame. And what do you know? We come straight back up and manipulate me directly out of this trade right here. That was a losing trade that I took in real life time because I was not paying attention to the higher time frame. I was just so focused in on the 1 minute time frame and getting an execution in. But we see that we come back up here to tap this gap up here. However, ES is not filling any of those. It is just moving to the upside. So if we look at ES here, we can see that we do break structure back to the downside, but I'm not looking for, trades to the downside. Why? Because we just had this sweep over here of, London session lows coming into New York session. So we had this sweep of London session lows, we had this sweep of Asian session lows. That is our only high time frame draw that has been taken. So looking back at it, I'm not sure why I was trying to short when we never took out high time frame liquidity to the upside, or even 5 minute liquidity to the upside to be able to take a trade off of. We are not looking for shorts in this current day. This is just manipulation for us to get baited into. So even though we get these clean breaks and it looks like we are maneuvering downwards, it doesn't look like the best draws really, and we look like we might be able to target higher for the day really. So if I'm looking at the 5 minute time frame, I'm seeing We never took out any high time frame draws on liquidity. We never got a big liquidity sweep off of market open. If we came up here and we took out these 1 hour highs to the upside, it might be a different story, and we might be able to, say justify that shorts might be the option for today. But we never ended up getting that when market fully opened. We just came down here to, whipsaw around, and we never actually came down to take out these lows either, because we've already taken out some lows. We've already taken out Asian session lows, London session lows, and we're just kind of maneuvering around in this point. If we are to look at the 5 minute time frame still and not take this as a pattern trade, we can see that, we get maneuvers straight back up to the upside here, and we can see that ES ended up breaking structure to the upside up here, and so does NASDAQ, even though I don't think we were in bearish structure. Yeah, no, we never got into bearish structure, but we get into 5 minute bullish structure on ES anyways. So we're changing back order flow to the upside, and we see that if we play out a couple more candles, we open up these fair value gaps right here, where we didn't have them before, and we had less clean movement. If we maneuver us back down here to this, we see that we get retraces back into here. We get breaks of structure to the downside on the 1 minute time frame that are confirming our 5 minute retrace candles that we are seeing. And we can see that if we play it out a bit more on either of these indexes, we get maneuvers back up to the upside, breaks of structure upwards. Probably be looking for this gap to get inversed, and then you could take a trade off of that, really. Yeah, see, it's just whipsawing around, so you wouldn't want to take a trade in this until we do inverse the gap. But do we break structure within this move? We already did break structure, so yeah, I'd probably look to long here. Maybe throw the stops underneath there, target these London session highs, or even further up if we can through the day. But we'd be looking for reasons not to trade for the day. So if I'd already lost on this short down here, then I probably wouldn't be entering this. This does get stopped out because we have this 5 minute gap right here. So it was not a smart idea to take it off of that. But if we see, yeah, we kind of whipsaw around, so it's not really ideal like conditions to be taking a trade in realistically. So we're seeing just market screw around and not really do too much, and it was a lower volatility day, so overall we just never got the delivery that we were looking for. So if you're not getting super high time frame draws taken off of the bat, it might not be a good idea to trade in the market, and especially if we get moves to the downside here where we would think that we would want to go short, then we come back up here and we go 0.7% to the upside is a lot of percentage. And I think that we do end up coming up to these London session highs afterwards, but if you were to take a trade, it would have to be underneath both of the most recent lows, so it would have to be under these and probably these to be able to take a upside trade. So you'd have to take that, and it would have to be huge trade to take throughout the entire day, and probably be break even by the time you hit these London session highs, and then you would have gotten stopped out at break even. So overall, just lower volatility day. If you're seeing that something in your plan is not getting hit or fulfilled, then it should be red alarms in your head to go, maybe I should stay out of this day. Maybe this day is not really the greatest. So you're gonna want to be kind of methodical and like a robot with your strategy. So I encourage you guys to maybe take a screenshot of the entire thing that we have for text. I think it's gone again. I think I deleted it, but go back in the video, take a screenshot of it, you know, put it in like a Google Doc or put it into a PDF file, and just be able to, you know, stare at that as you are taking trades. That's what I kind of did when I was learning. I just kind of put it on a PDF file, just noted it down, made sure I looked at that every single time, did a check mark off each time that things were hit, and then, you know, if you take a trade and you end up losing off of that strategy, then, you know, you can journal it, you can log it, you can try to identify if something wasn't hit in that step process. But realistically, if everything gets hit in that step process and you still end up losing, it is still comes down to a game of probabilities. So you can still do everything right in this game to be able to take a successful trade, to be able to take a successful look and guess as to where you think the market's going to go, and it could completely prove you wrong and still not work out. But you know, that's what the probability is for. It's for showing that it works most of the time, and it works either 70, 50, 60, 80, 90, 100% of the time. Not going to work 100% of the time guaranteed, but you know, whatever that percentage point is, it's going to work that amount of times. So realistically, if you follow that checklist, and you probably won't be able to follow the checklist very easily in your little the first starting bit of this journey, because it's going to be very hard and difficult for you to recognize these things on the charts as they pop out to you. But you know, I'm going to say it, try your best to, you know, consume all the content that you can, learn everything that you can, you know, look for reasons more or less not to take anything, really. So if you're looking for reasons where, you know, something didn't get hit, and you know, you end up missing the perfect thing for that day, it's perfectly fine. That's a winning day. That is a winning day. You need to stop looking at the people that are taking winning days off of that and that have more experience than you. You need to not feel the fear of missing out of something, even if it does play out in your favor, and you're like, oh, I saw that, not that was perfect. I should have taken that. I should have taken that. That's how you end up losing. And that's how your psychology gets the best of you, because you feel like you deserve that thing to, or that perfect setup to, you know, be something that you took, or be something that you traded, because you know, you ended up missing out on it. But if you miss out on something, do not, and I repeat, do not force yourself into getting into something too late at the worst time. So we see that, you know, market was supposed to be moving down towards these Asian session highs, and then it comes down to be like right here. You're not going to enter right here. You're going to want to be entering, you know, up here. Oh, I can't show you. You're not going to be wanting to enter all the way down here on this move and have your stop loss all the way up here and take a trade like this, 0.08. No, you're going to want to take something like this that's at the top of the trend. You know, you're not going to want to chase in when things are getting, you know, to the point where, you know, it wouldn't even be worth putting risk on the table in case, you know, something happens. But, you know, that will come with time and experience. Just make sure that, you know, fear of missing out does not get the best of you, because that is going to be something that, you know, you'll probably struggle with, and we'll go over all the emotions that you'll kind of feel throughout this. But you know, you need to be really good at getting in control of those emotions, recognizing when they happen, you know, journaling them, you know, looking for reasons not to trade. If there was a reason not to trade, then you know, it's a good day. It's a good day to not take a trade. So even if the price delivery cleans up magically and then it starts moving in your direction. So whatever, can't cry over things that we did not take or think that we're going to work out, really. So that's all that I have to give to you guys today. So peace out. We'll see you in the next one.